Americans have a staggering $1.7 trillion in student debt. Now, this number can be anxiety-inducing for borrowers, which is why the conversation around loan forgiveness and cancellation has become so prevalent. But what loans are eligible for forgiveness, and what are the different types of student loans? Well, joining us now to break that down as part of our Student Loan Week is Yahoo Finance reporter Rhonda Lee. Good to see you, Rhonda. So help us break this down.
No problem. So the first thing we want to talk about is financial literacy. And the bigger problem is that a lot of times borrowers are taking out this debt not understanding what's happening. They don't understand the difference between federal student loans versus private student loans. And just to educate our readers, 92% of student loan debt is federal student loan. The other 8% is private student loans. Here's the big difference. When you have your federal student loans, typically they are in deferment while you are in school, so you don't start your payments until after you graduate. When it comes to private student loans, you can possibly be required to pay on those while you're in school. The other thing you need to know is that with the federal student loans, there is a fixed rate. With your private student loans, there can be a fixed or variable rate, which means that 1 month your payments might be lower, but as interest rates go up, which we've seen over the past 9 months, then your payment increases. I saw this a lot in 2008 when we had the crash, and people who had $600 a month payment with their private student loan lender, it jumped up to $1,300. The other thing you really want to consider when you're talking about federal student loans and getting student loans is that when it comes to federal student loans, your loans, if you unfortunately die while you have your loans, your debt dies with you with federal debt. If you have private student loans and you die, that debt passes on to your estate, which means that your parents, your spouse, or your heirs will take on that debt. So these are conversations that need to happen, and people need to understand what's happening with their loans before they get into them, as they're looking at their FAFSA application, trying to decide whether or not the parents want to get the Parent Plus loan. Another reason why you want to make sure you are taking a look into this. With your federal student loans, there are several ways to do repayment. One of the great things about them is the income-driven repayment plans. IDR. If you have federal student loans, you want to know about IDR. So that with IDR, if you have been in repayment for 20 to 25 years, after 20 to 25 years, the remaining balance is forgiven or discharged. Also, if you have federal student loans and you're a teacher, you're a doctor, or you work in public service, you're firefighter, after 10 years of repayment, your loans are discharged. If you have private student loans, that is not the case, or if you refinance your federal loans into a private loan, you miss out on those options. So when you're looking into this, be sure you're looking at what happens after you take out those loans, before you sign on them, because I've run into too many borrowers who were doctors, worked in public service, and they thought they were eligible for public service loan forgiveness, but they refied those federal loans into private loans, and they cannot get the benefit of that. So those are just things that parents, borrowers need to consider before they sign on a dotted line. Take the time to ask the questions.
And Rhonda, you raise a very good point there, especially people looking at sort of the front end of the loan, not really thinking about the consequences of things, as you mentioned there, of what they could be missing out if they refinance. Appreciate you breaking that down for us, our very own Rhonda Lee. Thank you as always.